What's going on, everybody? Kevin Cage here with another crypto update. I hope everybody's doing well and you're not going to want to miss today's video. We're going to dive into a bunch. So to set the stage, let's say that you're an investor and you bought Bitcoin back in 2020 and you bought it for 10,000 bucks and then you ended up selling it for 60 grand a few years later. So you made profit, don't get me wrong, and big congrats, but you paid the IRS thousands of dollars. And in today's video, I'm going to show you a number that is 1,000 times worse, $908,589. And that's one of the biggest tax mistakes that crypto investors are still making today, and I built this calculator to prove it, so stick with me. And this is going to be our dedicated monthly iTrustCapital video, but we're going to dive into a bunch more. We also have a Nomura survey that I do want to go over, and keep in mind that their subsidiary is monitoring XRP. We also got news that stocks and even ETFs, Tesla, Apple, Coinbase are coming to iTrust. And this is going to be our monthly dedicated iTrustCapital video, and you guys already know I've had my Roth IRA with iTrust since January of 2020. If you're going to do an IRA, which stands for Individual Retirement Account, not financial advice to anybody else, but for me, I want a Roth IRA so that all of the gains grow 100% tax-free. If I'm in, a risky asset class making asymmetric bets, if I hit a home run, I want 0% tax. I don't want to be taxed at ordinary rates. But they also have plenty of other options. I mean, even in a SEP and SEP if you're self-employed. They have a PCA for traditional taxable accounts, and then they even offer treasury accounts. And just looking at the pricing so you know what you're getting yourself into, there are no monthly fees, there are no quarterly fees like other platforms hit you with. I was with another provider or custodian before iTrust in 2019 and I made the switch. So keep in mind, if you are just holding your investments, letting them grow 100% tax-free in a Roth IRA, you are paying absolutely nothing. The only time there is any fee is just a 1% transaction fee anytime you trade, any buy or sell. So that's just like Coinbase, except you have tax advantages. And another thing I want to add is with Coinbase, you can't set a beneficiary. I mean, maybe you could with an LLC account and you submit a bunch of estate planning documents, but with iTrustCapital, it is seamless. You have a beneficiary for your accounts. If something ever happens to you, you know that you're taken care of. Or at least your loved ones are, because in that scenario, you'd be dead. And lastly, before we dive right into the math today, if you haven't done so already, make sure you create a free account on iTrust. So I have this linked right in the top of the YouTube video description. It is in the pinned comments, and it's also the first link in my link tree. And using my link down below, you get a $100 reward after funding. So feel free to check it out, even if you just want to create a free account and look at the dashboard. But it would be a single login. You can have a Roth IRA, you can have a taxable normal exchange account, and even a treasury account all in one dashboard. Now, let's dive right in, baby, and friendly reminder, nothing shared in this video is tax, financial, or legal advice. Always consult a qualified professional when you're making any financial decision. So I built this website and calculator. This is cryptotaxreality.com. Now, everybody should know that from the very first moment that you buy your first crypto asset, basically every single thing you do is a taxable event in their eyes. So if you're swapping Ethereum for Solana and you're just rebalancing your bags, that's actually to the IRS selling one piece of property and buying another, and that's a taxable event. So even if you swapped your XRP for USTC, that's a taxable event. If you swap between any asset, you use crypto to buy something, anything, it is a taxable event. Now this is where it gets ugly, and this is very important to understand. There are basically two tax buckets. So there's one if you hold an asset for a year or less and sell, that's a short-term capital gain. So that is taxed as ordinary income. Now for federal brackets in 2026, they can go anywhere from 10% to even 37% in taxes. So that's a short-term capital gain. Now, if you held it longer than a year, you bought the asset, you held it for over 1 year without swapping it, selling it, or anything, that is considered a long-term capital gain or a long-term rate. And long-term rates could range from 0% to 15% or even 20% in taxes. And even in this infographic right here, you can see most middle earners, you can see married couples, high income earners, they're getting taxed like crazy. And that's just referring to federal. If you also live in a state like California, I mean, you're getting hit with even more. So what really sucks about this, and I know it can be case by case, but even a short-term trader that is making a lot of money, they could be paying, 30, even 45% in taxes on every gain, every single trade. And that part really hurts because it's not just trades or positions to make profit, it's positions that you take to even just stay diversified or rebalancing your bags. Every time you trade on a regular exchange or in a regular taxable accounts, you're not trading crypto. You're basically trading with the IRS as your silent partner. And we all know the IRS, they get their cut every single time. Now, I'm going to assume everybody's familiar with an IRA. It stands for an individual retirement accounts, and there are a few different flavors. We have a traditional versus a Roth. Now, IRAs have been used in the stock market for decades. When you compare it to crypto, it's still relatively new. Now, high level, and feel free to read the infographic on the screen, with a traditional IRA, you are putting pre-tax money in, you don't pay any income tax on it now, and your trades grow tax deferred. But the big catch is that when you pull that money out in retirement, every dollar is taxed as ordinary income. And we just went over federal capital gain rates, taking a huge slice out of that pie. So even if you had a huge sum of money, you're going to be paying even more in taxes using a traditional IRA. Which in my opinion defeats the entire purpose. Now, a Roth IRA completely flips that model upside down, so you're funding it with after-tax money. So this is money that you already paid taxes on, you are ready to invest. And the magic, especially for the crypto asset class, precious metals, or even stocks on iTrust, is that every dollar of growth, every trade, every swap that you make inside of a Roth IRA, even every withdrawal that you take in retirement is completely tax-free forever, 0% taxes, versus potentially 37%. Now, before we get into this live calculator demo, I just wanted to highlight the 2026 IRA limits. So for the contribution, we can see it is $7,500 per year if you are under the age of 50. So for this calculator, in this example, we're going to do a monthly contribution of $625 because $625 every single month after 12 months or 1 year is $7,500, the annual contribution limit. And that's just the standard limit. If you're age 50 or older, you can invest or even contribute even more. And same thing, there are actual income limits. If you're a single filer, you cannot make over $168,000 per year. If you do, there are other options like a backdoor Roth IRA. What's really nice about a Roth IRA, there's no forms that you're filling out, there's no tax bill in April every single year, it is automated, especially considering if you trade on exchanges like I do, the Form 1099-DA, everything for crypto tax reconciliation these days with taxable accounts is just a giant pain in the butt. Alright, let's dive into the good stuff. So this is cryptotaxreality.com, this is the website and calculator I built, I'll link it down below if you want to check it out. It is just a basic free calculator. It's not taking your email, no logins, no BS. So you can just put in your starting balance, any money that you decide to contribute each month, the years to grow. You can even do different scenarios like what if this runs and does a 5x, and this is actually based off of the years to grow. So if you grew it for 10 years and it did a 5x in 10 years, that expected annual return is just over 17% per year. In a little background, keep in mind, the S&P can do 10% growth, or its actual CAGR, or compounded annual growth rate, is estimated to be, right here, 12 to 13%. Now, obviously, crypto is a lot more volatile, and it performs a lot better over the long term. I'm not talking about a 2 or 3 year period. So even looking at Bitcoin's 10-year CAGR, we're talking 75 to 80%. Now, even if it's diminishing returns, I believe, not financial advice, the CAGR for Bitcoin in the crypto asset class, 5, 10, 20 years out, is still going to be miles beyond what the S&P 500 is doing. So I have different tax rates down below. Feel free to edit these, but I just set these as the default. And then I also have an estimated annual tax drag. So for the crypto space, instead of being dividends and distributions in traditional finance or any short-term gains, for crypto you could think of annual tax drag as any short term. So it could be crypto staking, it could be yield farming, it could be mining, anything like that. So you'd put that info in and then you'd click calculate and it's going to generate the results. And the reason that I built this is going to model 3 different scenarios. So the inputs are the same, but it's going to be comparing taxable accounts like a normal crypto exchange to a traditional IRA and then to a Roth IRA. Now, hint and full disclosure, it doesn't take a genius to realize this. Based on the years to grow, as long as it's long enough, a Roth IRA always wins. Now, if you're only investing in the crypto asset class for 2 years, you just wanted to do a quick trade and play the cycle, maybe a Roth IRA isn't the answer, but full disclosure, if and when you make a lot of money in a crypto bull run, you're not going to want to leave. You're still going to be paying attention every 3, 5, 10 years in the future. So that is why, for any long-term investor, a Roth IRA is a huge compliment if you're already running taxable accounts. If you're not doing both, you are missing out, because both have benefits. Alright, so let's actually show an example. So we're going to reset the default. So we're going to do a starting balance. Let's do 10,000 bucks. We're going to do the contribution limit of 625 bucks because that multiplied by 12 for 12 months is your annual contribution limit for a Roth IRA, $7,500 per year. We'll do years to grow, and this is where the magic happens, 30 years. And let's do, instead of an expected annual return of 18%, let's do something more in line with the S&P 500 at 12%. And FYI, that is very conservative for Bitcoin in the crypto space, especially over 30 years. Remember, for Bitcoin today, we can see the market cap is $1.5 trillion, whereas even gold is $32 trillion. The S&P is even bigger. We can leave all of this as the same for the tax rates and tax drag, and we're going to click calculate. And boom, we can see what we contributed over 30 years in total was $235,000. Now we have a taxable account. Say this is a normal crypto exchange. You would end up with $1.6 million. With a traditional IRA after tax, you would end up with $2 million, and with a Roth IRA, you would end up with $2.5 million. So when we look at a Roth IRA versus a taxable account, e.g. a crypto exchange, you would keep $908,589 more. Now let me zoom in a little bit so we can see this better. Here we can see the Roth IRA in the green, taxable accounts for the exchange account in the yellow, and then we have the traditional IRA in this like bluish gray. So we can see what matters most is years compounding, and that's where we really separate and where the Roth IRA wins. So we can see that the gap gets bigger and bigger the more years it has to compound. Obviously, we can see where taxes come from, so yellow is for the crypto exchange. We can see estimated tax drag. We could even just look at normal capital gains, $250,000 in capital gains alone. And obviously, a Roth IRA isn't even in this chart because it is $0 in estimated taxes. So when you're looking at total estimated taxes for a taxable crypto accounts, you're looking at nearly $500,000. Now going back to this widening gap, we have the Roth IRA in the green, and then we have the taxable accounts or crypto exchange in the yellow. See how the gap is getting wider and wider every single year? Because every single year, the taxes that you're paying, they don't just leave, obviously that sucks, but they don't even get to compound, and that is where the magic happens in a Roth IRA. So with the taxable accounts on a crypto exchange, you are paying taxes. Hence, next year, you have even less money on the exchange to grow. So every single year, there's more taxes, less money in the account. Obviously, it can appreciate in price as well, especially if you're contributing, but there's a big hit that is taken out, and it allows that gap to really widen. And that's exactly why I run both vehicles, a Roth IRA and a taxable account or multiple crypto exchange accounts together. Because then I have the flexibility of both, and for anybody that is investing more than $7,500 a year in the crypto space, you should be investing, maxing out the Roth IRA, and then investing the rest into taxable accounts. And friendly reminder for anybody that does contribute to a Roth IRA, you can withdraw your contributions at any time, penalty-free and tax-free. It's your money, it's not locked away forever. The only thing that's locked away up until age 59 and a half are the profits. You can still withdraw them, but if you wait until you're age 59 and a half and you've had the Roth IRA for at least 5 years, then you can get it all 0% taxed. Or tax-free, I should say. Now, if you want crypto profits before retirement, then obviously that's why you have also a taxable account working in tandem. So hopefully that makes sense, guys. Biggest takeaway is I'm not putting everything in a Roth. I can't unless you do, a backdoor Roth IRA. I run a Roth IRA. You can have multiple Roth IRAs that will affect the total annual contribution limit, but you can have a Roth IRA, and then you can have multiple taxable accounts. And I've been doing this for years. I mean, I've had my Roth IRA for, 13, 14 years. And I plan to compound this bad boy for another 25 to even 30 years up until I'm ready to retire. And think about it, you already diversify your assets, you might not just hold crypto, you might not just hold stocks, you might hold real estate, you want to diversify how you hold those assets, doing a mix of self-custody, qualified custodians, you name it, but the same logic applies to your actual vehicles, your investment vehicles. Don't put everything in one account type either, don't just go all in on taxable accounts. So that's why it's smart to run both. You can contribute or max out your Roth IRA every single year if you're able, and then you can put the rest in taxable accounts. And if you ever over-contributed in your Roth IRA, years later, you can pull that money out, whatever you contributed, so you're still liquid and you are still flexible. And the nice thing about iTrust is you are covered on all sides. You can do a Roth IRA, and then you can also do a premium custody account. Alright, so hopefully all that makes sense, guys, and all links are in the video description. So I don't know why my cursor highlighter keeps disappearing on me. I gotta return this on. So we already went over this before, but basically this summer we could be seeing stocks and ETFs coming to iTrustCapital. So this is literally the definition of a full asset lineup. Every single crypto asset, or at least 90 plus, the legitimate ones. We have gold, silver, maybe precious metals, or additional ones in the future, and then a variety of stocks and ETFs. Now, where I'm going to go with this is thinking about yield opportunities, RWAs. I mean, every single type of tokenized asset in the future, in the years ahead, especially with the Clarity Act. And thinking about a lot of platforms today besides iTrust, a lot of crypto IRAs, they limit you to just crypto or really just a few. Not to bash any, but if you look at Fidelity, I mean, there's only a handful. Bitcoin, Litecoin, people want options. But now iTrust went from just being a retirement platform to adding premium custody accounts, treasury accounts, even stablecoins you can earn yield on your Ripple US dollar. So adding stocks and ETFs this summer is going to be absolutely amazing. Alright, so now let's move to the bigger picture with institutional capital in the future of this space. So we have this shared by Evernorth, and I'm sure if you're in the XRP community, you're already familiar with Evernorth and Ashish Burla, the largest public XRP treasury company. And they just published this 2026 institutional survey, or Nomura did, and they're one of the biggest Japanese investment banks in the world. So they linked this blog. For some reason, I'm not able to visit it. Maybe I am today. Yesterday I wasn't. But I'm just going to go over the tweet because it's a little easier. But we can see that 79% of Japanese institutions are considering digital asset plan to allocate within 3 years. And approximately 60% of those will allocate 2 to 5% of portfolio AUM, or assets under management, into crypto. What's interesting is they even share the composition. So 66% of Japanese institutions want staking. We have 65% want lending and collateralized loans. We have another 65% wanting tokenized assets, and 63% see a use case for stablecoins. Obviously, the market cap projection by Coinbase and many others is at the very least $1 trillion, if not, multiple trillions of dollars over the next 5-10 years. And even that, operating on crypto and being connected to crypto liquidity would be really big. So I know this has to do with Japanese institutions, but this has global ramifications. We know the Clarity Act has about a 50-50 chance to actually pass, and if it does, it could pass this year. And if that happens, we could see a lot of US platforms actually have the regulatory frameworks they need to offer the same kinds of products everywhere: tokenized assets, yield, loans, RWAs. Now I know that iTrustCapital already offers staking for Ethereum and Solana, but I am thinking much bigger picture about RWAs in all digital assets. And last but not least, I just wanted to cover, we have Nomura, and they have a subsidiary, so a company that they own called Laser Digital. So we know that Nomura's digital asset subsidiary, Laser Digital, is monitoring XRP institutional demand as CoinShares reported $119 million in net weekly inflows. And this article came out 2 weeks ago, so it's relatively recent. So I just wanted to emphasize that we have growing Asian institutional interest in digital commodities and digital assets. And don't even get me started on XRP's connection to Japan, SBI, and all the other huge groups out of Japan. But I really hope you guys enjoyed today's video. I know it was a lot. I will make sure that I add timestamps to this one, and thank you so much for watching. Let me know your thoughts down below, and feel free to check out cryptotaxreality.com. If you have any suggestions or apps that you'd want me to build, If they're relatively simple, I can absolutely try. Hope you guys have a great day, and I will catch you in May. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.